Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This we get everything you need to know in 90 seconds at 9 o'clock with news the global bond market is rallying. Prices are up and yields are down, with traders now pricing in 3 US Fed rate cuts before the end of this year. There is a sudden risk-off mood appearing today. And first up today, we should note that American initial jobless claims came in slightly higher than expected, 249,000 on a seasonally adjusted basis. This rise attracted the headlines, but on an actual basis, they were in fact lower at 215,000 and a decrease of 10,000 from the prior week. There are now 1.94 million people on these benefits. And the widely watched ISM factory PMI for July contracted. The extent of the retreat was more than expected, the sharpest contraction since November. Shrinking new order levels was a key cause. Falling new orders were also a feature of the internationally benchmarked S&P market PMI version, although they do not see the American factory sector contracting yet. Both versions reported lower inflation pressures. These reports have pushed Wall Street sharply lower today. And globally, there were a number of factory PMIs released today as well. In Europe, the contraction was unchanged. In Japan, their marginal expansion slipped back into a marginal contraction in July. In India, their strong expansion continues, but now features very frothy inflation. South Korea are holding their own good expansion. In Taiwan, they're getting a good sustained expansion. In China, it's back to a minor contraction as new orders fall away there. And the fierceness of the housing falls in China was on full display again in July. The value of new homes sold by the top 100 developers fell 20% in July from a year ago. Sales fell 16% in June on the same basis. The declines in prior months were in the order of 30 to 40%. In Europe, the English central bank cut its policy rate by 25 basis points to 5%, but that was as expected. And global container shipping freight rates eased an insignificant 1% last week, holding very high. The same causes are still in play. That is extending sailing times and fattening shipping company profits. But bulk cargo rates fell 9% last week. The US Treasury 10-year yield is now at just on 3.98% and down a sharp 12 basis points from yesterday. And the price of gold will start today up $9 at $2,435 an ounce. But oil prices are down $1.50 at just on $76 a barrel in the US, while the international Brent price is now just over $79.50 a barrel. And the Kiwi dollar starts today 10 basis points firmer at 59.5 US cents. Against the Aussie, we're 40 basis points firmer at 91.5 Australian cents. Against the euro, we're up to another 20 basis points to 55.2 euro cents. That all means our trade-weighted index starts today at 68.7 and up 20 basis points from yesterday. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. And we'll do this again on Monday.